Hey guys, hope you are all having a great day. To say I am bullish is an understatement. I will explain why I am in the technical part towards the end of the video, so do stick around. In essence, GME and AMC finally broke out of a big bearish pattern, and we could see some serious bullish action these next couple of days. We had some important developments take place in Europe that had effects on the stock market. We are going to go over what these were and what they mean for us. It was a very boring day trading, and even when I was scalping, I noticed that the stocks with the highest volumes had very little retail participation. This is something that has been bothering me for a while, and I talked about it on my Discord. For a couple days, I have noticed retail investors not trade as much as they typically do, which is totally fine as fears of what could happen in Europe have made investors pull away from any sort of inclination for investment. Looking at the time and sales, and the general way that stocks behaved however, shows that most of the price movements we have seen came from bot trading and algorithms. Seeing this in comparison to the way stocks traded, in particular major caps and daily runners, left me scratching my head, as it could mean that the price action we are seeing might not be authentic. Regardless, that's just a small observation I wanted to share with you guys. I was going to release a morning video today but I scheduled it wrong, so I will instead post it tomorrow at 8 a.m. before we start. Let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Let's begin with the market's favorite villain, Russia. Wall Street's main benchmarks ran higher today due to positive news that showed Russian military units will begin returning to their permanent bases after completing drills near the Ukrainian border. The Pan-European Stocks Index ended slightly bouncing up as a result as well. The Kremlin has repeatedly denied that it would be invading Ukraine in the coming days, but the corporate media has been producing article after article. The fear-mongering and call for arms has been nauseating to say the least. Even the NATO chief Jens Stoltenberg told reporters that there are grounds to base being cautiously optimistic over the situation in Ukraine, and this man is at the helm of what is happening in Europe. But the America propaganda machine is making it seem like we fingers are hovering over nuclear launch codes. The markets continue to experience weak performance, though they did bounce up with the bullish news that Russia is beginning to step down. Let's now switch it over to the SEC, which announced that 6 investment advisors and 6 broker-dealers have agreed to settle charges that they failed to file and deliver. The fines for breaking CRS form requirements are so pathetic that you will wonder why they even bothered charging them in the first place. Arthur Zaysk was fined $15,000, Banyan Securities along with Church, Gregory, Adams Securities were charged $10,000. Gut Financial Management and Hinsdale were both charged $25,000. The higher-charged broker-dealer was only fined a little over $97,000, not even a 6-figure fine, and then we are left to wonder why it is that these institutions continue to break the law. I made a lot of content and DD looking into what getting charged by the SEC entails, and the answers are baffling to say the least. When a financial institution agrees with the SEC to get charged, they sign a document which absolves them from any wrongdoing, so that they don't have to face any legal consequences in court later on, or so that nothing that they did can be used against them in a future case. Furthermore, the way these documents are written make the fines be categorized as business expenses, since they aren't considered fines for wrongdoing due to the clauses embedded in them. As such, these same criminals, all 12 of the charged investment advisors and brokers, will be allowed to write off these charges as business expenses, and they will receive tax deductions from them. I really wonder what I am supposed to feel like when the SEC states that with today's actions, they ensured retail investors' safety. If I only had to pay $10 for every $1,000 I make by stealing, outright lying and failing to deliver my own clients' information, I would violate it every single time. This is absolutely ridiculous, and the SEC should not be boasting about such small fines either. This changes nothing. It does not deter future criminal behavior. In fact, it does quite the opposite. It creates an incentive to break the law, for no consequence will be faced by Wall Street. On another important set of news that I did not cover yesterday, federal investigators launched a probe into block trading at Wall Street hedge funds and major banks including Morgan Stanley and Goldman Sachs. The SEC and the Department of Justice are investigating whether bankers may have improperly tipped off hedge funds ahead of large share sales. Upon request for comment, Goldman Sachs and E-Trade famous Morgan Stanley both declined to comment. The SEC sent subpoenas to several hedge funds and banks demanding trading records and information about investors' communication with bankers. Regulators will begin looking into irregularities related to block trades. The way I see it, I think it's good the SEC and Justice Department is looking into this, but I'm not optimistic about anything. They too will get some chump change fines at the end of the day, signing away any wrongdoing and continue to do so in the future. As a result of this, I will buy some extra GME before Friday as a show of rebellion against the system. Last important news you guys need to know come from the greatest hedge fund to ever exist, Jim Simons Rentech. Renaissance Technologies nearly doubled its AMC stake and reinvested in GameStop in the fourth quarter of 2021. Being the biggest and best performing hedge fund in history, I have a lot of respect for their investment decisions. Watching them continue to double and triple down on meme stocks shows that RecTech is just as serious as some of us diamond-handed apes. They know and see the worth that both GameStop and AMC have to offer. Simons Fund ramped up its AMC bet by 87% to 4.7 million shares last quarter and disclosed holding 2,600 GameStop shares worth about $400,000 at the end of September. They had previously exited the stock back in the third quarter and reopened their positions again. If RecTech is firm and strong in their conviction for GME and AMC, who is to say anyone else shouldn't be? GameStop and AMC are both going to the moon, and I am buying the dip ASAP with the gains I made selling Roblox and BlackRock stock on their way up. The grind never stops, and I will collect all the shares I can. Let's now talk about today. The Fed submitted over $1.608 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 58% of the total volume today, while dark pool trades for GameStop accounted for 48% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bullishly, gaining over 7% for the day. It began trading very bullishly following the positive news that Russia is beginning to withdraw forces away from the border of Ukraine. It jumped from around 17.90 yesterday to around 18.30. It stayed trading there until it once again jumped above 18.60. After retracing back to 18.20 support, the markets opened and AMC became very volatile, falling down to 18 again. After reaching this low, however, AMC bounced up, making higher highs until it ran to 18.90. After this run, it retraced and found support at 18.40. After trading and consolidating for a bit, AMC once again shot up, closing at 19.48, above the VWAP. As for tomorrow, AMC will find support at 19, 18.85, and 18.40. Resistance will be met at 19.50, 20.20, and 21. AMC broke out of a bearish wedge pattern it was in, finally giving bulls a strong sense of rally. Many large institutions are buying the stock in anticipation for great earnings, which Adam Aron already hinted was coming. Do not sleep on AMC, for this stonk is bound to have a fantastic run once all these market conditions ease off of it. AMC has been preforming strong and has had a ton of really bullish catalysts. I want the stock now to consolidate above 18.20, for that is where the resistance line for the bearish wedge will lie tomorrow. It is very possible now more than ever for AMC to start moving aggressively, so to all of you who have been degenerately buying the stock non-stop, you are about to be printing real good in no time. GameStop traded bullishly, gaining over 7% for the day. It opened to a lot of volatility that took it above 122, but it retraced back to 119. After this dip, GameStop began making higher highs, running above 124 at one point. After another retracement, GameStop ended up finding support at 122. It consolidated for a very short time before moving up, breaking previous resistance and jumping all the way to 127.23, the highest point of the day. It retraced to close at 126.16, below the VWAP. As for tomorrow, support will be met at 122, 120 and 117. Resistance will be met at 127, 129 and 131. GameStop is in a very bullish position. It was in a descending wedge and now has broken above critical resistance. I want it to continue to build on top tomorrow. There is a good chance for us to fly to 131 and break past it, which will be crucial. I think big money is investing heavily on this stock because they know the next earning reports will be really bullish. Don't sleep on GameStop, because this baby is headed straight into the moon. I am rooting big time for it to close above 125 tomorrow as well. I want a run above 131 and upward consolidation, especially now that it broke out of the bearish pattern. Today was an absolute breath of fresh air. AMC and GameStop had been moving up for the last couple of days, but they still remained within that bearish pattern. Now that they both managed to crawl out of that hellhole, we can finally enjoy whatever little sunshine shorters will allow us. Big money is buying, and I see a lot more people buying options too, which could lead the stock prices to shoot up again. Let's not get all crazy bullish now, but do know that I think the worst of all is behind us. We just have to brace for the rate hikes, and that's when I think the stock market will begin ascending strong again. Everything still remains super cheap at these levels, so don't miss out and buy this dip if you haven't yet. And that is all I have for you guys today. Let me know your thoughts down in the comments below. Remember to come join our Discord. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.